I could throw up any index, throw up an algorithm, and back test it and tweak a few numbers, and it'll look phenomenal. And it'll never work because Hey, I'm John Stevenson, the Guaranteed Retirement Guy. I'm in the woods here over by Kirkwood, California, and I wanted to talk to you a little bit about annuities, and in particular, fixed indexed annuities that are performing badly. And if yours is performing badly, then I want to present a solution to you. Probably isn't a week or two that goes by where I don't have several calls of people calling me that are frustrated because they have a contract, their advisor sold them, and they showed them all these great numbers and how great it was going to grow, and these huge participation rates and these interesting indexes that they never heard of, but they were assured that they would work out great because, they showed back-tested numbers that show like 30% returns. And unfortunately, these returns do not materialize. And why is that? Well, a lot of these indexes are back-tested. They're not actually, they don't actually have any real-world experience. I mean, some of them do, granted, but if they do, it's only for a few years. So if you're looking for a solid index, it should be like NASDAQ or S&P or the Dow Jones or even more known, like you still got some Barclays and Fidelity indexes that work well as well. But I do like the traditional indexes. I wanted to talk about that because there's actually a product out right now. It's offered by Midland National. It's a 5-year surrender charge period, so not very long, but it's with the NASDAQ. And they actually have a rate lock, and they'll give you 70% of the NASDAQ. Whatever it does, they'll give it to you, which is great. If you want to pay a 1% fee, they'll give you 85%. That's pretty good. But then you've got other contracts like with National Life Group. Right now, they've got one that'll give you 11% cap on the S&P. And if you pay a fee, they'll raise it up to actually 14%, which is pretty decent, especially when you're protected 100% against market risk. They're giving you a decent opportunity to actually earn a decent amount of growth. When you're looking at companies and you're looking at where is the most growth, where is the best indexes, where are the companies that won't lower my cap and participation rates drastically after the first year, in my opinion, National Life Group is one. Midland National, especially if you got the rate lock, is good. Delaware, Mass Mutual, they have rate locks right now. Allianz does not have a rate lock, but they have an index lock, and that allows you to basically lock in gains as they are earned. But you only get to do it once during that period. So you kind of pick and choose. You can put almost like a stop or a limit order if you want. If it gets up to a certain amount, you can limit it out, or if it gets down too low, you can stop it out and at least retain some gains. So it's kind of cool. They're the only company that actually allows you to do that. Yeah, you just have to pick the right company. You have to pick the right company, you have to pick the right index, and you have to pick the right advisor who's actually going to show you these companies. Because a lot of times they'll show you something that has a fancy index, looks beautiful, pays them a huge commission, and they hope they never talk to you again. Okay, and that is a horrible way to do business, because if you want to actually make a decent living and you want to take good care of people, you want to have referrals, you want people to feel like you really are acting in their best interest, not in your own. They all know you're there to make money. Like, we're all here to make money, right? But if we're going to make money, we might as well do it honestly. We might as well do an extremely good job for people. In my opinion, you should be the very best at it, or don't do it at all. Okay, it's like anything. I feel that way in church. If I'm going to go to church, if I'm going to be religious, then I better be the best religious person I can be, or forget about it, right? If I'm going to be a dad, if I'm going to be a husband, I better be the best one I can be. If I'm going to take on those responsibilities, I better take it seriously, okay? If you sell annuities like myself, you better be the best, okay? You better be willing to show people everything that is available. And if you're making less money on it and it's still best for the client, then you better be showing it to them. Okay, and unfortunately, a lot of people don't do that, and they have lots of reasons why, but none of them are correct. There's never a good reason for that. I digress. So when you're looking for the best FIA, the fixed index annuity, look for indexes like NASDAQ, S&P 500, solid indexes. Even some of the S&P futures aren't too bad. Do your research, okay? Check to see how long the index has been around. That's really what you want to see. You want to see real history. Don't look at back tests of returns. Anyone can do that. I could throw up any index, throw up an algorithm, and back test it and tweak a few numbers, and it'll look phenomenal. And it'll never work because It doesn't account for slippage in the market. It doesn't account for orders that were never filled, whether you got in or out of the market. And so it doesn't show the true losses or the true gains. And so they're selling something the client shouldn't have. So anyways, if you want to book a call, you want to talk about your annuity questions, if you have a fixed index annuity that is not giving you the returns that you want and you want a better option and you want someone who's going to show you everything, then book a call. There's a link below this video. Go straight to my calendar. If you want to go to my website and check out annuities, they're income annuities. You won't be able to see the FIAs. You got to book a call for that because they're all over the place. But if you want to see other types of annuities that they should give you the highest income, like the income rider, go to my website, johnstevenson.com, and you'll be able to look at those as well. Just remember, if you're looking for highest guaranteed income, you're not going to have highest growth. Those usually will run out at some point as far as the cash value, the death benefit. The income, that's guaranteed, that's contractual, that's your pension. So I just want to make sure that's very clear. When you purchase annuities, you purchase them either one, for income, and get the highest income you can, or for whatever term you're looking for. And whether it be a single or a joint, make sure that's taken care of. And then if you're looking for growth, make sure you're looking at MYGAs, or make sure you're looking at fixed index annuities with the right indexes, with the right participation rates, and with the right company that has a decent renewal rate history. That's all I have to say about that, but I say it with as much urgency as I'm capable. I hope you enjoyed this video. Hopefully it's been beneficial. Hopefully you learned a lot. And I enjoy making them, and it's beautiful out here. Love the snow, and hopefully be able to take my kids skiing. And I'd like to teach my son how to snowboard this week. We'll see how the conditions are, but he'd like to learn that. We love being out here. It's a blessing. But if you want to chat, go ahead and book a call. If you like the video, make sure you click the like button. Make sure you subscribe so you can get all of the rest of my awesome content. And then if you got comments, ask them below and I'll answer them. Okay. So thanks again for watching, and we'll see you next time. Hey, I really appreciate you watching the video today. If any of it makes sense to you, or if you found value, or if you even got a question about anything, I hope that you'll go to the comments section and ask it. There's no stupid question, and I'm looking forward to hearing from you.